Hi, good morning and welcome to Morning Trade with Moneycontrol. I'm Sumaira Abidi and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries answered live during the course of our show. So keep commenting on our live feed and we'll take up your queries in this show today. But before we get our guests on board, let's see what has been the handover from the global market and what it looks like. It's pretty good actually this morning. Wall Street has ended Friday's trading session sharply higher with the Dow Jones closing up nearly 2%, the S&P 500 2.5% higher and the tech-heavy Nasdaq over 3% higher. This rally has come at the end of one of the longest weekly losing streaks for the major indices, helping to snap 7 weeks of losses in the US market. Strong earnings and a slowing inflation print has helped Wall Street see its best week since November 2020. And today, the US market, of course, will remain shut. There'll be no trading there. It's shut for Memorial Day. Meanwhile, stocks in the Asia-Pacific region have opened higher, and this week, investors will look out for China's official manufacturing PMI to assess the economic impact of the COVID-19 lockdown on the mainland. Meanwhile, the exchange Nifty indicates a strong start for the Indian market. Another important cue to monitor will be the oil prices. Brent crude has hit $120 a barrel as the European Union continues negotiations over a complete ban on Russian oil. The start of the peak demand season in the United States has also aided this up move. So let's invite our first expert of the day, Rajesh Palviya of Axis Securities joins in now. Hi, Rajesh. First up, what a stunning finish in the US market. What kind of cues do you think the Indian market will take forward? And do you expect that this week we'll see a lot more green?
Good morning. Yeah, definitely, we have seen, a positive global cues and the kind of recovery in the last week, especially in the Nifty and Bank Nifty has clearly showing that, again, we are going to witness, bullish trading session. And then looking at the setup also, 16,200, that is the important level now. We are sustaining above that level, and both the indices, Nifty, Bank Nifty, manages to, cross about 20-day moving average. So this is clearly an indication that, near-term sentiment is improving in terms of, on the buying side. And after, major corrective action in the May series, the rollover activity was, witnessing that, it was very low rollover in compared to last 3-month average rollover. But again, in the last trading session, especially, we have seen, some bit of short covering action in the Nifty as well as in the Bank Nifty. It clearly shows that, shorts are, now getting out from the system, and the kind of recovery from the oversold sectors is also, suggesting that, we are going to have another, bullish momentum in the market, and possibly we can see Nifty to head further higher towards 16,450 to 16,550. These are the level which we are expecting in the near-term basis. So yes, definitely one should remain long. The trading stop losses for Nifty at the current juncture is around 16,250. One can keep these stop losses and to remain long in the market, and we expect that another bullish round of market in the coming trading session also.
All right, that's good news. So let's talk about some stocks. First up, let's put the spotlight on the auto sector because we'll have the auto sales which will be due this week. And, we've also received results from M&M where the showing is quite good, actually better than expected. And it's the auto segment which has led, this performance in the fourth quarter. So on M&M in particular and the auto pack in general, what do you favor and what's the trend forecast?
Yeah, definitely, Sumaira. So we are bullish on the automobile space and the kind of performance we have seen in the recent past. So we believe that this upward momentum is likely to continue for automobile stocks. Especially if we talk about the M&M, this is the only stock which is clearly showing outperformance despite of down move which we have witnessed in the May series itself. The stock is almost trading near to its almost all-time high trajectory. The kind of setup and kind of build-up we have witnessed in the M&M, we feel that this stock is likely to move further higher towards 1,040, 1,050 level in the coming trading sessions. So one can remain long in the M&M. The stop loss from the current level is around 920, and our target for positional basis is 1,050 for M&M.
Okay, I think, okay, the other stock actually we want to speak about is from the metals pack, JSW Steel. Here, the quarter four earnings have disappointed. I mean, on all accounts, it's a bit of a miss. But the metal pack, in any case, has seen quite a bit of correction. Are stocks now right for some, value buying at these levels?
So definitely, we have seen very sharp corrective action in recent past on the metal stock, and most of the stocks now trading below to their important moving average on the near term as well as on the short term trend. But the kind of recovery especially in the last trading session from the recent low is showing that they are already in the oversold zone, and post this May series expiry, some bit of short covering has been seen in the metal space also. But still, there is a still shorts are there in the system. So we believe that whatever pullback actions comes in the near term will meet to the supply at the higher level. Especially if we talk about the JSW Steel, the stock has broken down its important support area of 580. So till the stock remains below 580 level, we feel that some more pressure is likely to continue in the stock, and maybe again it may go down towards 520. If at all stock manages to cross above 580 level, then possibly stock can show some bit of more short covering, which can take the stock further higher towards 620 level. So as of now, 580 is the immediate resistance area for JSW Steel.
Okay, and we have a query coming in from Kamalaja R, who wants to know, is it a good time to add Vedanta near the zone of 300?
Yeah, definitely. If we compare Vedanta with other, steel stock, Vedanta is looking, now stable. After the recent sell-off in the metal space, now since last 7-8 trading session, stock is trying to hold its important support area of 300 level. So we feel that if its stock continues to hold above 300 level, then possibly some pullback action should come in the stock towards 325 to 330 level. So if it's a trading back, keep stop loss of 298 for upside target of 325.
Okay, some of the other stocks which will be in focus today, amongst them is, United Spirits, where fundamentally the news is that, good earnings, there's been a near 14% revenue growth, and also the important trigger for this stock will be that the board has approved the sale of 32 brands in their popular segment. So look out for that stock today. Rajesh, you see some upside here?
So purely for trading perspective, yes, there could be some pullback action should come in the stock, because the stock has taken the support from its multiple resistance, multiple support zone of 755, which is very important level for United Spirit at the current juncture. If it continues to hold above 755 level, then possibly one pullback action should come in the stock towards 820, 830, which is the area where one can book profits. So if somebody is buying at the current level for trading perspective, keep stop loss 755, upside target is 820, 840.
Shubham Srivastav has sent in a question. He has given you a chance to pick for him. He says, would you rather pick Alchem Lab or Tvs Lab for a long-term bet?
So definitely, I'll go with Alchem Lab, because currently in the recent corrective action also, Alchem Lab is still trying to hold its monthly support area, which is at around 3,000 level. So possibly we can see Alchem Lab can bounce back sharply from the current level also. He can keep stop loss of 2,900. And we are expecting that the kind of setup which is there on the monthly as well as on the weekly basis, 3,500 to 3,600 could be the target on the higher side.
Okay, what about something like a ONGC, where this earnings has been a big miss, top-down miss. They've had higher operational expenses, depreciation, exploration costs, and all of that. Because of that, we have seen a miss on the EBITDA and PAT. And would you short at this point, also given the backdrop that crude is now at what, 120?
In the recent move, what has happened on the ONGC's stock broken down its 200-day moving average. And now looking at the short built up in the stock in the last trading session is clearly showing that some more pressure we can see in the ONGC towards 130, 125, which is the next level for the ONGC on the downside. However, on the higher side, the stock is having immediate resistance area at around 155. Until stock not crosses above 155 level, we would like to remain short in the ONGC, and we are expecting lower side target of 130 to 125.
Okay, and another question coming in from RTR. She wants to know on Titan, whether it's a good time now to accumulate Titan shares for the long term.
So, in line with the market, we have seen the same kind of corrective action in the Titan also. But since last 7-8 trading session, stock is trying to hold its 2100 level, which is the immediate support area for the stock. The long-term trend for Titan is bullish, but for short-term, yes, there is some weakness in the structure. We feel that if stock manages to continue, hold above 2100 level, then possibly some pullback action can come towards 2300, which is the level where one should book profit. So overall, long-term setup is bullish. So if somebody wants to hold it for long term, then there is no as such cautious measure. But for trading point of view, one should follow the stop loss of 2100.
All right, Rajesh, thanks for now. We're going to come back to you for your stocks in just a bit. Let's invite Gaurang Shah of Geojit Financial Services, who joins in for a fundamental take on the market. Hi, Gaurang. Good morning, and thanks very much for joining in. We've seen an absolutely superb finish in the US market. Do you think, there are more legs to the rally? And for the Indian market, is there more volatility ahead now? Do you buy the dip or do you wait?
Thanks, Sumaira, for having me on the show, and morning to all of you also. I think given the uncertainty in the global markets, one can expect the volatility to continue. It's not that the global markets and our markets are out of the woods. Inflation still remains a risk. Interest rates on the up move is still a reality. And we heard the Honorable RBI Governor as well in his interview with, I think, CNBC TV 18. And our sense is that, since we have seen more than 15% correction on the index and maybe sector and stock specific a little bit more, the extent of volatility could be much less. And hence, we feel that possibly, the intraday, we've seen the kind of moves over the last maybe over a month or so, Sumaira, 500, 600 points up in the morning. And by the time we close the markets, we have lost all that gain and we are deep down in the red with equal amount of points getting lost. So let's hope that this our sense is that volatility could come down, but it will persist. But if you ask me whether these markets have become a buy on dips market, then my sense is definitely yes. Given the correction in the index, given the correction in the stock price, I think the valuations have started to look a little bit more attractive.
Okay, valuations are looking attractive also for large caps, is it? Because, they've taken a big hit. There's been this relentless FII sellings. Amongst large caps, which names would offer best opportunities for retail investors? Or is it like, you throw a dart and you'll hit a good name?
No, I don't think so. And, honestly, Sumaira, people have this tendency in a falling market to wait out. And, the most unfortunate thing about waiting out is that you remain outside. You don't become, you don't come into the market. You don't get into the mainstream. That's the problem. So instead of timing the market, I think start getting invested at current levels. What my advice would be that don't put all your money at one time. Given the uncertainty, I think the markets will give you a lot of more opportunities in the future to, allocate more capital towards your equity market investments. So what I've done is, Sumaira, for the better understanding of all the viewers and investors, I've broken down some 4 or 5 sectors. And if you allow me, I think firstly I'll say banking and NBFCs, banking and finance in short. So in banking, our preference has always been towards private sector banks. So names like HDFC Bank, Axis Bank, ICICI Bank, amongst the private sector banking, amongst the NBFCs, Bajaj Finance, M&M Finance, Chola Mandalam Investments, Shriram Transport Finance, and amongst the HFC, that is housing finance companies, HDFC and LIC Housing. This is the first category of banking and NBFCs that we have shortlisted in form of a model portfolio, if you will. The second one will be IT, given the sharp correction, if you will, post the Q4 numbers last financial year. So in IT, I think the top large cap names would be TCS, Infosys, and HCL Tech. Tata Elxsi, KPIT, and Tech Mahindra would be amongst the other names. In autos, we just saw the numbers from M&M some time back. Tata Motors, M&M, Bajaj Auto, and Ashok Leyland Escorts. This would be the preference in autos. In metals, given the export duty overhang and the correction, and we did see on Friday great pullback in names like Tata Steel and Hindalco and JSW Steel. So in metals, we like all these three names, that is Tata Steel, Hindalco, and JSW Steel. And in cement, despite the fact that there are concerns of input cost and a little bit of overhang in terms of margin pressure, Ultratech ACC, Dalmia Bharat, and Ramco Cement. So, Sumaira, what I've done is I've created maybe 10 or 15 stocks of model portfolio in different sectors for the better understanding of your viewers.
Gaurang, thank you so much for that. This is really appreciated by the viewers to give us such clear and concise advice. But, from the broader markets, what is the trend that you see? Is it time to perhaps stay away from mid-caps? I mean, that's a space where last year we've made a lot of money. Or you think for long-term investors, there is still some value here?
So, Sumaira, the biggest problem for mid-cap as well as small-cap has been the earnings catch-up. And I'm really, it hurts me to say this, there was a time, if you remember, when, a lot of money, a lot of liquidity was chasing the small-cap universe, and small-cap universe outperformed the large-cap and mid-cap. I think it was one of the best performing index, small-cap, at once upon a time. But then the reality sinks in. And the reality, Sumaira, is that if the earnings don't deliver, the valuation have to adjust on the downside. And that's what exactly has happened. So I would say that don't go towards small cap as of now, because there is a lot to be done for the small cap companies in terms of earnings. But mid cap, I think in this small model portfolio that I just listed down, there are a couple of mid cap stocks, starting with IT, starting with, maybe it's a cement company or even autos, as a matter of fact. So my advice to your viewers and investors would be that instead of going all out, be extremely selective in terms of sector and stocks that you pick up. So I would say IT, banks, NBFCs, and FMCG would be the sectorial universe within which you could possibly, hunt out or fish for some mid caps in terms of earnings visibility.
But Gaurang, from all the sectors that you have listed out for us, any particular space where the upside is more clearly visible?
So from a model portfolio, I'll come down to master portfolio, Sumaira. And I think banking and finance, that is NBFC, given the huge positivity on the earnings front. Now, whether it is NBFCs, whether it is private sector banks, or whether it is even, as a matter of fact, public sector banks, maybe like State Bank of India and Bank of Baroda, are the two names that we like at Geojit amongst the. So banking and finance would be one sector amongst all the universe of sectors that I would possibly, really say that you should allocate more capital towards your portfolio for this particular sector, that is banking and finance. And not to forget, Sumaira, my sense is that you are going to see a very slow and steady credit demand growth coming back, which will help the earnings of both banking as well as NBFCs.
Okay, Gaurang, one question, since earnings are so much in focus, Nykaa has reported earnings. Do you track that stock?
Unfortunately, the new age unicorns that just got listed have been terrible performers. And honestly speaking, other than Zomato, we have not covered Paytm or Nykaa. And one needs to be a little bit cautious, Sumaira. I'm giving this word of cautious only because there are no set rules for fundamentally analyzing these new age unicorn companies in terms of their IPO price and the valuation parameters. Every analyst has a different approach. So you need to be a little bit cautious.
True, actually, because Nykaa itself is down 47% from its listing high and now trading just 20% above the issue price. Gaurang, thank you very, very much for joining in today and for giving direction to trade for our viewers. Let's go back to Rajesh Palviya of Axis Securities, who's waiting by. Rajesh, thanks very much for waiting. What are the stocks you would be looking at in today's session?
So, Sumaira, clearly we are bullish on automobile, banking, FMCG, as well as we are expecting some action in the pharma space. So, we have identified some of the stocks from all these sectors. So, first stock is from automobile, that is TVS Motor. The kind of rally we have witnessed in the whole automobile space, and especially in TVS Motor, stock managed to give a resistance zone breakout on the weekly chart, and the stock is trading above all its long-term, short-term moving averages. So we feel that kind of setup for TVS Motor is exhibiting at the current level. We expect 765 target on the higher side, keep stop loss of 705. Another space which we like at the current juncture, that is insurance, and from insurance space we like HDFC Life. After after a big corrective action in the recent past, but now stock is trying to find support at around 550, 540 zone, and now stock managed to give breakout on its weekly chart of its down sloping trend line. So kind of breakout is there on the HDFC Life, is expecting the target of 625 in the near term basis. 588 should be the stop loss. Another stock is from pharma space, that is Dr. Reddy. If we analyze the setup for Dr. Reddy, after a recent corrective action in the Dr. Reddy, stock has now managed to give breakout above its 100-day moving average, and looking at the weekly as well as on the daily setup, stock is forming higher high formation, which clearly shows that some more upside momentum we can expect in the Dr. Reddy in the near term basis. So one can buy Dr. Reddy for upside target of 4,500 with stop loss of 4,320. The another space is banking, and from banking space we like HDFC Bank. Stock is continuously holding a support area of 1340 since last couple of trading sessions, and the breakout which is visible now on the daily chart, stock has recovered from its oversold zone, and the kind of traction we are seeing in the private bank, we believe that HDFC Bank will continue its upward momentum towards 1445. So one can buy HDFC Bank with stop loss of 1365. Another stock is Jubilant Food. After a big corrective action in the recent past, now stock managed to give breakout of its down sloping trend line on the daily chart, and the breakout itself suggests that some bit of reversal activity is there on the Jubilant Food. So we feel that Jubilant Food can continue its upward momentum towards 540. So one can buy this stock with stop loss of 505.
All right, Rajesh, thanks very much for your picks. Have a good trading session. With that, we're going to wind up on this edition of Morning Trade. Do stay tuned. Markets with Santo and CJ comes up next.